All right, looks like we've got a whole stack of info here on ICICI Bank.
Yeah, bunch of stuff.
Sent over by, our wonderful listeners. Must be
hmm
time to see what's really going on with this stock.
Definitely time for a deep dive.
See if it's worth, keeping an eye on. We've got some excerpts here from Screener,
Ah, yeah.
which I think most of our listeners know is a financial analysis site. They've got, all the nitty-gritty
They
numbers.
really crunch those numbers.
They do. They
Uh,
do. So I guess think of us as your financial detectives for the next few minutes here.
all right.
Is this a hidden gem? Is this a ticking time bomb? Or is it something sort of in between?
Let's find out.
Yeah, let's find out.
Well, before we jump into all that, though,
Yeah.
it's important to, understand the sheer size of this bank. ICICI is the second largest private sector bank in India.
Okay.
That's not just a statistic. That means their performance can actually ripple through the entire economy.
Wow, yeah. So definitely not a small player here. And it doesn't seem like they're just catering to one type of customer either. The report mentions they're working with individuals, small businesses, huge corporations.
Right. A very diverse client base.
Yeah.
And to handle that, they've got this massive network of branches and ATMs across India. Plus, they've got their fingers in other things, too, like insurance and housing finance, suggesting a pretty, diversified approach.
Yeah, it's like they're trying to cover all their bases here.
Yeah.
But let's get into some of the numbers.
Okay.
Screener has pulled out some key points for us. And these are basically financial ratios that give us a quick health check on the company.
Like a little snapshot.
Yeah, yeah. The first one that caught my eye here is the capital adequacy ratio.
Oh, yeah.
They're sitting at 16.03%, which seems pretty healthy.
It's good.
But what does that actually tell us?
Well, that's a great place to start. Capital adequacy ratio, or ARR, it's essentially a bank's safety net.
Right.
It shows how well they can absorb potential losses. So think of it as their financial shock absorber. The higher the KECR, the less likely they are to go under if things get bumpy.
Okay.
So 16.03% is a pretty reassuring number for investors.
So they seem to be, on solid ground, at least from a stability standpoint. But what about profitability?
Right.
I see a net interest margin of 4.57%,
Okay.
which sounds decent. But I'm curious, how does that connect with the current interest rate trends in India?
Ah, now you're thinking like an investor. The net interest margin, or NIM,
Yeah.
that's the bank's bread and butter,
Yeah.
the profit they make from lending money. It's the difference between the interest they charge on loans and the interest they pay on deposits.
Okay.
So if interest rates are rising, that could actually be a good thing for ICICI's
Yeah.
NIM, as they can charge more for loans. But if rates fall, it could squeeze that margin, potentially impacting their profits.
Okay, so keeping an eye on those interest rate movements is key.
Definitely.
Now, on to something that seems surprisingly positive. They're non-performing assets,
Right.
or NPAs, as they're called.
Yeah.
They've got a gross NPA of 2.30% and a net NPA of just 0.44%. I mean, honestly, those numbers seem incredibly low,
Yeah.
especially when you compare them to, some banks here in the U.S.
You're right to be impressed. Those are really healthy numbers. NPAs are essentially loans that have gone bad.
Right.
Borrowers aren't paying them back. High NPAs can be a huge red flag for a bank. But these figures suggest ICICI is doing a good job of managing its loan portfolio. They're lending responsibly and minimizing their risk, which is a big plus for investors.
Okay, so far so good. Now, the Screener report also has this pros and cons section.
Oh, yeah.
Which seems very helpful, except for the disclaimer that says it's all machine generated. So how much should we actually trust these automated insights?
It's always wise to approach automated analysis with a healthy dose of skepticism. Think of it as a starting point,
Right.
a way to highlight potential areas of interest. But you definitely need to dig deeper to get the full picture.
Makes sense. So let's start with the pros. And the first one is a doozy, a 5-year profit growth of 59.7% CAGR. I mean, that's got to raise some eyebrows, right?
That's huge.
But is this growth sustainable?
Yeah.
What's fueling this incredible performance?
That kind of growth is certainly impressive. But as you pointed out, the key question is sustainability. To understand if this is a fleeting trend or a sign of long-term strength, we need to look at the underlying drivers.
Yeah.
Are they capturing market share from competitors? Have they launched successful new products? Or is this growth tied to some external factor that might not last? These are all things you'd want to investigate.
Okay, so maybe not time to break out the champagne just yet.
Right.
But definitely something to, celebrate. Now, flipping over to the cons side, we see a high price-to-book ratio of 3.44. I know this relates to valuation, but can you break it down for me? Is this a red flag or just something to be aware of?
The price-to-book ratio is basically a way to compare a company's market value to its book value,
Oh,
which is essentially the value of its assets minus its liabilities. A high ratio like this could mean investors are really optimistic about the company's future,
mm,
but it could also be a sign that the stock is overvalued. It's definitely something to consider carefully.
got it. So potential for reward, but also some potential for risk.
Exactly.
And speaking of risk, the next con is a low interest coverage ratio. What's the significance of that?
Well, that ratio tells us how easily a company can cover its interest payments on debt. A low ratio means they don't have a lot of wiggle room.
Okay.
If interest rates rise or their profits take a hit, they might struggle to make those payments.
Okay, that's making me a little nervous.
Yeah.
And then there's this last con that really caught my attention. Massive contingent liabilities of over 58 trillion rupees.
Whoa.
What in the world are contingent liabilities? And should we be hitting the panic button?
Contingent liabilities are potential obligations that might come due, depending on certain events. Think of it like this. Imagine ICICI had guaranteed loans to a large infrastructure project. If that project goes belly up, those guarantees become actual liabilities, impacting the bank's finances.
Right.
It's not an immediate problem, but definitely something to monitor.
Okay, so maybe not panic button territory,
No.
but definitely a yellow flag. But to understand how concerned we should be, we need to know more about the nature of those liabilities. Like, what are they tied to?
Absolutely.
And how likely are they to actually become a problem?
That level of detail would require digging deeper into their financial statements and understanding the specifics of those potential obligations.
Okay, so we'll add that to our detective's to-do list.
Definitely.
Now, before we move on, there's one last thing in this key points section. A significant amount of their earnings, over 93 trillion rupees, is classified as other income. That seems like a lot.
It is.
Should we be worried about where that money is coming from?
Yeah,
Is it sustainable?
that's a really good question. Other income can come from various sources, like fees, commissions, and investment gains.
Yeah.
It's not necessarily a bad thing, but it's important to understand where it's coming from.
Right.
And if it's likely to continue, if it's tied to some temporary or one-time event, it could skew the bank's overall financial picture.
So another item for our investigative team.
Yeah.
But before we get too bogged down in those details, I kind of want to zoom out for a second.
Okay.
ICICI is listed on all the major Indian indices. Sensex, Nifty 50, BSE 500, they're everywhere. What does that tell us about their position in the market?
That level of inclusion speaks volumes about their prominence and attractiveness to investors. They're clearly a major player in the, bank's private sector category,
Right.
competing with the biggest names in Indian banking.
Which makes me think, wouldn't it be really insightful to see how they stack up against their peers? Compare their financials, their ratios, even those pros and cons we were just talking about.
That's a great idea. And luckily, the Screener report has a whole section dedicated to peer comparison. We'll leave that for you to explore, but it's definitely worth a look.
All right, so we've got our marching orders, but before we send you off on your own deep dive, let's just take a quick glance at ICICI's financials. We won't go line by line here, but maybe you can give us the highlights. What story do those numbers tell?
Well, the financials can definitely give us a more detailed picture of their performance. We can track trends in revenue and profit, see how efficiently they're managing expenses, and assess their overall profitability over time.
And that's where those financial ratios we discussed earlier really come in handy, right?
Exactly.
They help us interpret all those raw numbers and make meaningful comparisons.
Exactly. We can see how ICICI stacks up against its competitors in terms of profitability, debt levels, and overall financial health.
All right, so for anyone listening who wants to really get into the nitty-gritty, those detailed financials are all there for you to explore.
Consider it your detective's toolkit. Use those numbers to dig deeper, analyze the trends, and draw your own conclusions about ICICI's financial strength.
Speaking of key takeaways, there's a section here on recent announcements. Looks like ICICI recently allotted some ESOPs. Can you explain what that means and why it matters?
Yeah, ESOPs, or employee stock ownership plans, are a way for companies to give their employees ownership stakes in the company.
Okay.
They're often offered at a discounted price. It's a great way to motivate employees and align their interests with the company's success.
Ah, so it's like saying, hey, we're all in this together. Let's row in the same direction.
Exactly. And when employees feel like they're part owners, they're more likely to go the extra mile and contribute to the company's growth.
We've also got some info on the shareholding pattern. Looks like the public holds a pretty big chunk of ICICI Bank's shares, over 40%.
Wow, that's a significant portion.
What's the significance of that?
That wide distribution of ownership is generally seen as a positive sign. It means the company's stock is in the hands of many investors, not just concentrated among a select few.
So it helps to ensure a bit more transparency and good governance, right?
Yep,
Less chance of any single entity wielding too much control.
you got it. It's one of those subtle details that can reveal a lot about a company's structure and how it operates.
Interesting.
It's all about, keeping everyone in check.
Yeah.
Okay, so we've explored ICICI's financials, their position in the market, even some potential red flags.
Yeah.
But before we jump to any conclusions,
Right.
it's time for the big question.
Okay.
Is this a stock worth considering?
That is the million-dollar question, or maybe the multi-trillion rupee question in this case. Honestly, I'm feeling a little conflicted. What do you think? Are the positives strong enough to outweigh those potential risks?
That's a tough call.
Mm.
And ultimately, the decision is yours. We've laid out the facts, highlighted the key points, hopefully equipped you with the knowledge to do your own due diligence. Now it's time to put on your investor hat and really weigh the pros and cons. What are your investment goals?
Right.
What's your risk tolerance?
It's all about finding the right fit. But before we send our listener off on their own independent research spree, can you leave them with something to ponder?
Sure.
A final, thought-provoking question to really get those wheels turning.
Absolutely. Here's one to chew on. Given ICICI Bank's massive size and influence, how might their performance impact the broader Indian economy? Think about the potential ripple effects. If ICICI thrives, what does that mean for businesses, consumers,
Yeah.
the overall financial system? And on the flip side, what could happen if they face significant challenges?
Ooh, that's a good one. It really puts things into perspective. ICICI isn't just some abstract entity. It's a vital part of a much larger ecosystem.
Exactly. And understanding those connections can give you a much deeper appreciation for the complexities of the financial world.
So true. Well, I think we've given our listener plenty to think about. Any final words of wisdom before we wrap things up?
Just remember, investing is a journey, not a destination. Keep learning, keep asking questions, and never be afraid to dive deep.
Couldn't have said it better myself. All right, folks, that's a wrap on our deep dive into ICICI Bank. We hope you found it insightful and maybe even a little bit entertaining. Until next time, happy investing. It really makes you think about, the bigger picture, doesn't it?
Yeah.
When we started this deep dive, I had no idea we'd end up contemplating the fate of the entire Indian economy.
It's true. Sometimes these companies, they're so big, they're so intertwined.
But that's the beauty of these deep dives, isn't it?
Yeah, I think so.
You start with one question, and you end up uncovering all these fascinating connections.
Exactly. And, it highlights why financial literacy is so important. The more you understand about these individual companies, the more you start to see how they fit into this larger economic puzzle.
So true. Well, I think we've given our listeners plenty to think about.
Yeah.
Any final words of wisdom before we wrap things up?
Just remember, investing is a journey, not a destination. Keep learning, keep asking questions, and never be afraid to, dive deep.
Couldn't have said it better myself. All right, folks, that's a wrap on our deep dive into ICICI Bank. We hope you found it insightful and maybe even a little bit entertaining. Until next time, happy investing.